Welcome back. You're still tuned into Power Breakfast. Now, the big news that came through over the weekend, Vedanta has announced a big restructuring where they're going to split into 6 different companies. The management has also said that a demerger will help them simplify their corporate structure and give investors the choice of commodity that they want to invest into. So Nigel is here with all of the details on this important story. Nigel.
Well, we'll have many more Vedanta listed entities and investors will be hoping that more is actually merrier. Well, in the past decade, they have merged entities and they have flirted with the idea of having different listed entities in November 2021. But at that point in time, they didn't go through with the plan. However, this time around, they've announced that shareholders of Vedanta Limited will get shares in 5 newly listed entities with focus on their core competencies. Vedanta Limited will hold 65% stake in Hindustan Zinc. Its upcoming semiconductor as well as display businesses and all the stainless steel assets as well will be housed under this name. Next up is Vedanta Aluminium. That will house the aluminium business, including the 51% stake they have in Balco. Vedanta Oil and Gas will have Kane India, while its copper and its zinc international businesses will be under Vedanta Base Metals. Vedanta Steel and Ferrous Materials, well, they'll have its domestic iron ore business, the Liberia assets, as well as ESL Steel Limited. And finally, all the power assets will come under Vedanta Power. Now, just break up their FY23 EBITDA. Bulk of it came in from Hindustan Zinc, which will be housed under Vedanta Limited, followed by the oil and gas as well as the aluminium businesses. The management says that the demerger will simplify their corporate structure. It gives investors the choice of commodities they want to invest in and also provides a platform for individual units to pursue their strategic agendas. You need to keep in mind, though, when they merged these entities earlier, they had given a similar rationale. Well, the demerger will require approvals coming in from the board, from the stock exchanges as well as the NCLT, and it's expected to be completed between 12 to around 15 months. The Vedanta Group, well, they get flexibility to unlock value for investors by liquidating any particular asset or bringing in a strategic investor. Well, in the current structure, there would be double taxation, as they would be paying profit on the sale of the asset and also on dividend payout. While on demerger, promoters will be paying only the long-term capital gains. The problem for Vedanta, though, is Vedanta Resources. The debt issue continues to remain unresolved and they have payments of more than $4 billion from now till FY25. The promoter entity, Vedanta Resources, well, they have 3 tools to pay their debt. One is the dividend that they get from Hindustan Zinc and Vedanta Limited, money that comes in from the stake sale in Vedanta Limited, and also brand fees that they charge to the Indian listed entities. But now they are also running out of options. Hindustan Zinc's cash balance has been exhausted. Interest rates have increased amid downgrades by credit rating agencies. Now, post increasing their stake in Vedanta by 20%, Vedanta Resources, in fact, has sold some part of their stake, and that's made the street a little bit more nervous. On brokerages, Investec, they have a sell rating. They have highlighted that the company has carbon-heavy assets, and they're skeptical on the cash burn in the new ventures. CLSA, they have upgraded the stock from underperform to outperform, but they have lowered their target price to around 230 rupees, as they believe for sustained re-rating, the focus needs to be shifting back to the operating improvements. So short point, it's a good move. It's a temporary fix as of now. The stock opens up in the green, but we'll have to see whether or not there is some selling from the top.
All right, Nigel, thanks a lot for getting us all of those details on Vedanta and the restructuring exercise that they're about to undertake. But with that, it is time for a short break. On the other side, we're going to focus on all of the key macro data that came through over this weekend. Stay tuned for that.